In just a little over a decade, the revolutionary mobile money industry is contributing to more than 80% of the GDP of multiple countries including Ghana and Kenya. This clearly shows how fast the technology is growing in Africa and other parts of the world. With more than 1.2 million accounts and over $2 billion daily transactions recorded in 2020, I can confidently say that this is the game changer which is leading the continent into the long-awaited cashless economy. My name is Bernard and you are watching African Dream Motivation. Without wasting much time, let's begin. Transfer of money has always been a key element in building a strong economy. It has been through many technological advancements over the past centuries, with the highly developed countries determining the pace of the industry. In the 20th century, many financial institutions were established, proving a long-lasting solution to money transfer through multiple payment systems. Europe and America began moving into a cashless economy where companies like Mastercard and Visacard had been dominating for the past 50 years. With the internet taking its form in the early 1990s, more technologies were introduced which created more convenient payment systems outside the banking industry. Many of these non-banking payment systems emerged in America, UK, and Asia, bringing so much expectation in modern-day payments and receipt of funds. By the late 1990s, digital wallets became a goal for many technological companies. Three people, namely Peter Thiel, Luke Nosek, and Max Levchin, established a software company known as Confinity, which was involved in the creation of digital wallets and other softwares for handheld devices. In 1999, Elon Musk founded X.com, which was an online financial service company. And in 2000, X.com and Confinity merged and later renamed their company PayPal. PayPal became very successful, causing eBay to acquire it for $1.5 billion right after their IPO in 2002, making it the most accepted payment method on eBay, with over 70% of all eBay auctions. Also in 2001, Alipay was founded in China by Jack Ma, who had already founded Alibaba in 1999. These payment platforms became popular in their respective continents, but Africa was still struggling to move into the cashless economy. The internet in Africa in the early 2000s was appalling, making it nearly impossible for such digital payment systems to succeed. Banking in Africa was still new, and the majority of the people preferred to keep their monies themselves. The few available banks were located in the cities where the elite government officials and the rich were based. The banking industry was young, and its adoption process in the African community was extremely slow. For the sake of profitability, the commercial banks at that time didn't consider establishing branches in rural areas and had just a few branches nationwide. These situations caused the unbanked and underbanked people to be the majority, with just a few people having access to banks. This made peer-to-peer transfer costly, risky, and in some cases impossible. It was clear that there was a problem with money transfer throughout Africa, but it was just a matter of time. Many small financial institutions took advantage and began establishing themselves in small towns purposely to target areas neglected by the banks. These microfinance and microcredit institutions began seeing a surge in success, but unfortunately, the space became populated with Ponzi schemes, making away with the hard-earned money of the poor and small businesses. The phobia of financial institutions folding up anonymously, leaving the poor in debt, was a great disadvantage to the banking industry. Some legitimate microfinance institutions were badly affected since many people didn't trust the system anymore. While a few places in Africa had these experiences, there were some that had no interaction whatsoever with any banking institution. There was a problem with money transfer, and this affected millions of people worldwide. Therefore, a solution was definitely going to grow into a billion-dollar industry soon. By the year 2002, great thinkers were about to unravel the revolutionary mobile money technology. The idea for mobile money started way back in 2002, even before any internet service provider or telecommunication company thought of rolling it in. Before the 21st century, many telecommunication companies had made it to Africa through direct establishments, acquisitions, or even mergers. You could speak of MTN, Vodafone, Airtel, Tigo, and many others. Almost every community had a community center where citizens turned in to make and receive phone calls. The telecommunication industry in Africa was gradually taking its form, with a transformation from expensive SIM cards, usually for phone booths, to an affordable one where even the poorest of persons could afford. The industry kept growing, getting a wide range of acceptance throughout the continent. Mobile phone manufacturers began looking at the African market as potentially viable for cheap and affordable phones. As time went by, the ordinary African was able to afford a phone and a SIM card. This was a very important basis for the success of the telecommunication companies in Africa, and in the long run, the success of mobile money as a whole. When these great transformational changes were occurring throughout the continent, major financial institutions still remained in the cities, keeping majority of the population off the grid of the banking sector. The few who had bank accounts couldn't use it completely for their day-to-day activities because in most cases, the desired recipient wouldn't have an account. Money was transferred by trusting it with drivers of commercial vehicles heading to the destination of the recipient. This was very challenging because sometimes monies were never delivered, and other times too, the recipient will have to walk miles to reach a major road to catch up with the bus and receive the money. With the presence of telecommunication companies, talk time was able to be sent from one person to the other. This narrowly showed the way to the possible future of digital money transfer system in Africa. It could be possible that around Africa or even the world, people might have thought of the idea of mobile money, but the first instance of the mobile money system ever recorded was in Kenya. In 2002, a young man called Nyagakah Ouko, who was a university student, saw things differently. He realized that he could buy airtime, which was a scratch card, and send the recharge number to a call center in his village, which would in turn give the cash equivalent to his mother, who had no access to a bank. This idea became a success, making him think outside the box and decide to establish his business across Kenya. The business model will involve merchants who operate in various towns and receive airtime scratch card numbers and deliver cash equivalent to clients and vice versa. After conceiving the idea and planning it out, he began the process of getting a patent and registering his business. His idea was unique, and since it involved the transfer of money, getting a patent became very frustrating. It took him a couple of years before he was able to complete the paperwork and the legal requirements. He began presenting his business proposal to attract great investors in an attempt to properly launch his money transfer system. He contacted Safaricom, which is a subsidiary under Vodafone Group in Kenya, with the hope of securing funds for his business. During the same time, the UK government's Department of International Development has set up a competition called the Financial Deepening Challenge Fund, which invites companies to compete by showcasing outstanding innovations, and in the end, the best technology wins. The focus was to enhance the provision of financial services in emerging economies through innovative projects. Vodafone won the competition with a mobile money technology. When Safaricom announced a mobile money beta testing in Kenya, Nyagakah Ouko felt like his innovation had been pirated and therefore began seeking legal interventions. Long story short, Safaricom recognized the young man's play and made him a vital part of the newly introduced innovation. He became pivotal in the success of M-Pesa, which was the name of Safaricom's mobile money system, and by far, it is the most successful in the Kenyan market. Before the M-Pesa system was developed, researchers at Ecommerce and the Commonwealth Telecommunication Organization were funded by the Department of International Development (UK) to investigate and analyze the money transfer system in Africa. At the end of their research, it was documented that countries like Uganda, Botswana, Kenya, and Ghana were already using airtime as a proxy for money transfer. They realized that a more systematic and secured means will spice up the money transfer industry. They communicated their findings to telecommunication giant M-Cell in Mozambique. M-Cell didn't sleep on the idea. The company worked vigorously hard, and in 2004, the first authorized airtime credit swapping system was created, and this was a great milestone in the mobile money space, which is believed to have contributed to the creation of M-Pesa by Safaricom in 2006. Safaricom's new innovation became so popular and was accepted in Kenya, and by 1st March 2006, over 50.7 million Kenyan shillings had been transferred through the system. This was proof that it had come to stay, and for that matter, measures were put in place to develop the product further and ensure its sustainability. Experts from IBM came in later to help make the system remarkable. While Vodafone kept developing and improving their mobile money system, other telecommunication companies were also on their toes to find their ways around it and beat the competition. By 2009, South African telecommunication company MTN, which had hit a 100 million subscriber mark in Africa and the Middle East, came in strong again, using a blue ocean strategy to take advantage of the untapped regions in Africa. MTN launched a mobile money service in Benin, Ghana, Cameroon, Ivory Coast, Uganda, and Yemen. In no time, countries like Ghana began booming with millions of people embracing the new technology. Other telecommunication companies like Tigo, Glo, Airtel, and a lot more began offering a mobile money service. The industry looked promising, and it enjoyed greater acceptance in West Africa than any other region on the planet. The first and most important element of this system is that a user must have a mobile phone with a SIM card from a telecommunication company or an internet service provider which provides mobile money services. It doesn't matter the type of phone a user owns. All one has to do is register for the service and he or she is good to go. All mobile money services have at least one of the following products: domestic or international transfers, mobile payments including bill payments, bulk disbursements, and merchant payments. All these are readily available the moment registration goes through. It is simple, fast, convenient, and most importantly, at a considerably lower cost. Also, the service relies heavily on a network or a transactional point outside banks and ATMs, making it easy and accessible to the unbanked and underbanked people, and the general public as a whole. This is why the service grew in a matter of months to millions of people. The era of walking long distances to the bank just to make money transfer or withdrawals were coming to an end. The bizarre experience of packaging money to be sent through a commercial vehicle was over. A new era was unraveling. Mobile money agents were recruited and trained to handle the disbursement of money in various communities. Today, these agents are a matter of meters apart, making it super easy for clients to make transactions. Mobile money has grown over the years, contributing significantly to the growth of the African economy. Mobile money service providers have been working so hard to improve and add highly valuable products to their services. Today, most mobile money platforms have the following services: cash in and cash out, peer-to-peer money transfer, voice and data top-up, merchant payments, bill payments, international remittances, and recently, bank deposit and withdrawals. These high-quality services is what makes the mobile money industry highly appreciable by the masses. Compared to the traditional banking system, it is easy, reliable, efficient, and cost-effective. Therefore, many people prefer to use mobile money for their day-to-day transactions instead of using their credit cards or bank services, which mostly attract higher transactional costs. Anybody at all from anywhere in Africa can operate a business, make payments, and receive payment through the mobile money system, which has also created millions of job opportunities throughout Africa. The poor, the unbanked, and underbanked people who couldn't own a credit card or even a bank account now has this powerful tool in their pockets. Mobile money is transforming the African economy in diverse ways. When you look at the global e-commerce industry, the companies rely on a trusted and convenient payment system to receive payments from customers. Payment services like PayPal, debit and credit cards, Alipay, and many others have contributed to the success of the e-commerce industry, especially in America, UK, and China. But in Africa, it is totally different. The aforementioned payment systems have not been able to find success on the continent. Mastercard and Visacard are trying their best to have the share of the African market, but its adaptation had been sluggish. Their efforts had always been through banks, which are even struggling to appeal to many people, making it difficult to match up their success in developing economies. African e-commerce giants like Jumia, Konga, and Kilimall rely greatly on mobile money to receive payment for orders on their platform and also pay out royalties to third-party sellers. Just a few people in Africa use credit cards in online transactions, so the introduction of mobile money has made it even easier for the target audience of these e-commerce companies to make payments for their orders. In a report released by GSM in 2018, it was indicated that mobile money has created over 1 million jobs throughout the continent of Africa, with countries like Ghana and Kenya leading the charts. The report also said that in 2018, MTN alone recorded transactions to the value of $1.3 billion per day, which was outstanding considering that the system had only been out for just a little over a decade. According to a report released by the Bank of Ghana, the number of mobile money agents at the end of December 2016 was 107,415, with MTN mobile money contributing 54%, Tigo Cash 24.9%, Airtel Money 11%, and Vodafone Cash 10.1%. The emergence of mobile money in Africa became a headache to many commercial and rural banks as well as microfinance companies. Mobile money products such as peer-to-peer transfer came with very little charges per transaction as compared to what the financial institutions had in place. Gradually, payment of remittances and bills such as DSTV, electricity, and others became reliant on mobile money for customers to honor their obligations. Looking at how the technology was growing, it had already beaten the banking system, and therefore, the banks had an option to either join the winning team or step aside and watch them sweep the market. This led to the introduction of mobile banking in Africa, which was already in existence in other parts of the world. The banks and other financial institutions partnered with the various telecommunication companies to offer their products through USSD applications and smartphone apps. This was a great move to up the game of the financial institutions. This partnership allowed people to create bank accounts, make deposits and withdrawals, transfer funds from mobile money to their bank accounts, and vice versa, by just dialing a short code and following the prompts. By the fall of 2019, many banks and financial institutions had taken advantage of this opportunity to reach even more customers and make their services as convenient as possible. Even though this leverage was a great advantage to the financial institutions, telecommunication companies, who are also the mobile money service providers, also had an interest. Before 2021, the commonest way of withdrawing money from your mobile money wallet was by walking to a merchant and making a withdrawal. So what if there are no merchants around, or they've closed for the day? This was a bit of a problem, but after the telecommunication companies had a leverage with the banks, they made a smart move to add an extra diversification to their withdrawals. In 2021, MTN announced that customers will now be able to withdraw money from automated teller machines from partnered banks like Ecobank, GT Bank, Fidelity Bank, Access Bank, Barclays Bank, Zenith Banks, and a lot more. This has strengthened the relationship between the mobile money service providers and the banking sector, with each side enjoying tremendous benefits. Getting to the end of 2019, some businesses were on top of their game, leading the market comfortably. But in early 2020, the mystery coronavirus pandemic began. This became the nightmare of many businesses all over the world. Many industries were on the verge of collapse, and even billion-dollar establishments couldn't find a way around the recession. Companies like WeWork, which has shown promising growth, was hugely affected. The airline industry was not spared. International giants such as Virgin Airlines was struggling to survive. It had been the greatest downfall of many economies in the world in modern history. The banking industry also didn't have a breathing space. Panic withdrawals from customers were on the rise, and when government finally imposed the high level of restrictions, most people in Africa turned to mobile money. The question here is, how much influence did the pandemic have on the mobile money industry? Firstly, let's look at subscription accounts and activity. In 2020, the total number of registered accounts grew by 12.7% globally, adding up to 1.2 billion accounts. These metrics resulted in over 300 million monthly active mobile money accounts. This indicates that more people went digital to ensure safety protocols were observed without hindering the flow of their money to and fro their accounts. Transactions grew exponentially, making the global value of daily transactions exceed $2 billion. And considering the trend, it is expected to surpass $3 billion by the end of 2022. transaction limits of individuals were increased to allow more funds to be sent and withdrawn. This was a motivating factor for people who needed to make huge payments or receive huge funds. As the patronage level continued growing, merchant payments increased from 28% in 2019 to 43% in 2020, resulting in an average monthly payment of $2.3 billion. Strong partnership with governments. When COVID-19 was at its peak, many governments were seeking ways to minimize their tolls as well as manage the declining economy in any way possible. Some governments rely on mobile money to distribute monetary and fiscal support to individuals and businesses. This resulted in the value of government-to-person payment quadrupling during the pandemic. In countries like Ghana, loans and cash incentives were distributed to citizens through mobile money systems upon application. Agent network categorized as essential service. In the heat of the pandemic, many businesses were forced to close, causing huge losses. Lockdowns were enforced and the flow of money was greatly affected. It was fear everywhere, and the experts advised that the general public stay at home. In all these fears, people still needed money to survive. To prevent excessive movement and to make contact tracing easy, authorities relied so much on mobile money services. Mobile money merchants were exempted from closing down in many African countries. It was considered as an essential service and was treated as such. Agents were allowed to operate by observing all COVID-19 protocols, which included the provision of hand washing stations and ensuring personal protective equipment were available for themselves and their customers. This was highly significant to the enormous success of mobile money during the pandemic. Since a number of them were located in communities, it helped prevent the overpopulation of people in banks and other financial institutions. Interbank transactions during the pandemic. During the pandemic, many people were indoors and were unable to go about their normal activities. The best way to still interact with the bank was through their mobile banking service, which had a strong tie with the mobile money service providers. This left many people who were still not willing to get their feet wet with the mobile money system think twice. The two industries became complementary to the extent that banks were able to get their customers to make deposits and withdrawals without setting foot in the banking hall. Mobile banking over the past 5 years has seen transactions between mobile money and banks grow so much that in 2020, it reached a total of $60 billion, growing from $15 billion in 2015. A few banks took it a step further in an attempt to establish themselves in the mobile money space. For instance, Ghana Commercial Bank introduced J-Money, which was a whole new platform designed to compete with the mobile money services available. J-Money works like the traditional mobile banking system, but with this, customers of the bank were able to transfer money from their bank accounts into their J-Money wallet and cash out at any J-Money agent, saving them extra costs which would have been incurred if the transaction was done through a mobile money service provider. It was obvious that this new technology was not going to outmatch the services provided by the telecommunication companies like MTN, Vodafone, and the others. But it also got some traction, which will be very good for the bank in the future. To confirm the possibility of success of exclusively owned mobile money services by banks, J-Money, which was created by the Ghana Commercial Bank during the peak of the pandemic, reached 2 million subscribers on 10th November 2021. This was just 20 months of its establishment, indicating a huge success for the bank. At least it was worth the try. By the end of 2020, It was evident that mobile money services has more potential to grow and even become bigger than it is. The biggest mobile money service providers are multi-billion-dollar companies, which has what it takes to sustain the innovation for as long as you could think of. MTN is ranked as the most valuable company in the whole of Africa, valued at $2.7 billion. And Vodafone is second on the list, valued at $1.7 billion. These huge companies have also entered into partnership agreements with some of the biggest money transfer companies around the world. Vodafone has built a reputable relationship with leading money transfer operators such as Western Union, MoneyGram, WorldRemit, Remitly, and MFS Africa, bringing in remittances into African countries, contributing to 60% formal remittances into Kenya and 20% into Tanzania, amounting to $1.5 billion. On 16 February 2021, Mastercard and MTN announced a strategic partnership that will allow millions of consumers in 16 countries across Africa to make global e-commerce payments safely and securely without using a bank account. This is really a next level partnership that promises to give consumers more advanced products and boost the economy of Africa even more. On 13th August 2020, Boston Consulting Group did a research which was entitled 5 Strategies for Mobile Payments Banking in Africa. It was found out that transactions through mobile money wallets and phones were equivalent to 87% of the GDP of Kenya and also 82% of the GDP of Ghana. These are the fastest growing mobile money markets in Africa over the last 5 years, and it is even getting bigger. The moment any payment system is launched, it faces the risk of scammers and fraudsters plotting an attack on the system or finding loopholes to steal money. Mobile money has not been an exception to these fraudulent activities, especially in Ghana and Kenya. The scam in the industry has grown to a very disturbing level. It all began with scammers appearing to be workers of mobile money service providers with the intention of luring vulnerable customers to expose their credentials, allowing them to make transfers from their accounts. These fraudsters mostly fed on the poor and illiterate by sugarcoating the scam as an ideal opportunity for victims to win huge sums of money from draws as well as celebration giveaways. The fraud has gone to an extreme level where hackers are able to breach protocols and interfere with servers to process payments without physically having access to mobile devices of victims. On 3rd October 2020, the mobile money industry in Uganda, which had recorded transactions worth $20 billion the previous year, faced the biggest technical breach ever recorded in their history, amounting to over $3.2 million loss. According to a report done by Quartz Africa, the hackers used about 2,000 mobile SIM cards to gain access to the mobile money system and instructed the bank to transfer millions of dollars to the SIM cards. This gigantic money heist caused the suspension of mobile money transactions indefinitely by MTN Uganda and Airtel Uganda. These breaches has called for much stricter measures to be put in place by telecommunication companies and the government as well. Nigeria began an exercise ordering all telecommunication companies to cancel subscriptions which had not been duly registered with the required national identification cards. This was to help track some of these fraudulent activities and also make investigation easier. Their sister country, Ghana, has also followed suit, with the regulation to take place in 2022. In Ghana, to curb the issue of mobile money fraud, An ID card is required by merchants before any withdrawal can be made. This and many strategies have been put in place to check the operations of scammers and control fraud. But in all, no money transfer service is completely void of scammers and fraudulent activities. Not PayPal, not Mastercard, not even banks. Even though the mobile money service providers and governments are working around the clock to protect their customers and citizens from scammers, I believe more needs to be done, because in as much as many people are coming on board, others might leave due to insecurity. Even though the global value of mobile money's daily transactions exceed $2 billion, it is very surprising that it is nowhere near its peak, and many countries, especially in Africa, are now embracing it even more. A report released by the Global System for Mobile Communication indicated that it is expected to grow to over $3 billion of transactions per day. Again, great economies in Africa such as Nigeria and Ethiopia are now thinking of expanding the mobile money service, which will also have a positive impact on the growth of the industry. Finally, if the pandemic hasn't taught the financial institutions anything, I am sure they have learned to appreciate the mobile technology and develop it even further to reach more clients. With this said, I believe that more banks and financial institutions will strengthen their partnership with the mobile money service providers, or even go ahead to develop their own mobile money systems, like what the Ghana Commercial Bank did during the pandemic. Even though it won't be easy to compete with the giants in the industry, at least it will give the banks an edge to keep up the race. Mobile money is the biggest payment system in Africa, and there is no doubt about that. This is one of the greatest innovations to ever grace the continent of Africa. And even though it is not a perfect system, it has provided Africans, both poor and rich, a means to a satisfying modern money transfer. With the topic of cashless economy in Africa still hanging, I believe it is not far from reach. With mobile money growing at a faster pace, and countries like Ghana and Nigeria introducing eCedi and eNaira respectively, Africa will soon get there. Thanks for watching this video to the end. Let me know what you think in the comment section. If you are new here, don't forget to subscribe and click on the notification bell. Also, share this video with anyone you believe will love it as you did. Thanks again. See you in our next video. Until then, have a nice day.